Welcome back to Trading 360. I'm Marley Caden. Let's get some insights on the news shaping markets today. For that, we welcome in Dale Smothers, President and CEO of RDS Wealth Management. Dale, great to have you with us back on this show. I would love to get your thoughts on this market action we're seeing. You know, we've got a red day, a lower day, but it doesn't necessarily feel dire at all as this rally seems unstoppable.
You're exactly right, Marley. You know, the market is trading on two assumptions here: that AI demand will continue and that the price of oil does not bleed into the private sector, that it doesn't impact inflation, and that hopefully the Iranian crisis is over sooner rather than later. If those two things continue to be true, I think this market rally climbs higher, and I could see an S&P 500 at 8,000 points, but I don't think that comes without a pullback. And hopefully it's not too big of a pullback. There's a lot of headwinds that we'll be facing here in a midterm year. But as you said, it continues to climb that wall of worry, has been the mantra for the last at least 2 to 3 quarters. As we've talked through this market rally.
Yeah, it certainly has. I mean, I keep waiting for the time we start talking about the pullback, but it seems to only be a one-off day episode that we get here, a couple days, and then we're off to the races again. So with those two assumptions that you just mentioned, an end coming or a cooling to the conflict in Iran, and also AI demand being underestimated, which one do you view as being more important right now?
Yeah, I think that the AI demand is the most important, because if you think about the underlying foundation of the market, Marley, there's an interesting fact that we have to pay attention to, and that is that for the third time since 1990, only 3 times has this happened. And you know, you've got a lot of data in the 90s that is tech driven here, but for the third time since the 1990s, we've seen more lows hit in the S&P 500. More stocks hit their all-time or their 52-week low than the 52-week high, yet we continue to set these all-time high closes, and that is because of AI. AI is certainly the demanding factor here for the market rally to continue. And I'll give you another interesting fact. I thought this was very interesting when you look at this. You know, before the launch of ChatGPT back in late 2022, Marley, the S&P 500, if you think about all the market caps, semiconductors made up only 6% of the S&P 500. Now, this week, it just surpassed 22%. So if AI demand starts to suffer, or if we go back to late 2025 and investors aren't happy with AI spend, you could see the market begin to have a pullback, as we mentioned. That is not good for anybody, because we are led higher due to tech. We could easily go to a low point in the market because of tech.
Dale, you just brought up my 2 most fascinating points from the notes you sent over. I flagged both of them, that we're now roughly about a quarter of the S&P 500 being tied to semiconductors now, as opposed to that 6% you mentioned pre-ChatGPT in 2022. But also, I think of similar importance here, that Friday was only the 3rd time since the year 1990 that the S&P hit a new high while posting more new lows than highs. So with those two things sort of hand in hand here, what does that tell you about breadth and also about how dramatically AI has reshaped the markets overall?
AI has reshaped the market for sure. And the breadth of the market, unfortunately, if you think back in the end of 2025, you start to see this breadth. You started to see a broadening out in the market. That is not the case anymore, and that's all basically happened over the last, say, 30 to 45 days. The market has went straight up due to AI demand, and what was being punished back in October of 25 is now being championed in these earnings calls. And you've got to consider a little bit of a cautionary approach to the market because of that, especially with the clients that we serve here, Marley. At RDS Wealth, our number one goal is to position our clients for the possibility of participation in this optimism, while also positioning them for protection if the market starts to pull back. And one of the major factors that could cause the market to pull back is this change in the sentiment, the change in the idea that we're rewarding AI spending AI has changed the market. And if you're not participating in it, you're missing out on money. But if you participate too much, if you fight this greed monster and unfortunately lose to the greed monster, hoping that you can make more than you actually need in your overall plan, you're going to expose yourself to unnecessary risk.
Oh, Dale, there's so much more I want to talk to you about there, but we sadly have to leave it there for today. But you'll have to come back and join us again soon so we can break more of that down. Really appreciate you bringing those two statistics to us as well. Dale Smothers, President and CEO of RDS Wealth Management. And we've got a lot more for you today on Trading 360, so don't go anywhere. We've got the big three coming your way next. Rick Ducat will take us through the technicals. Jessica Inskip is joining us with her picks for today. Arch Capital, Comfort Systems, and MSCI. That's next on Trading 360 on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.